The Dow and the S&P 500 struggling at the start of this holiday shortened week. The Nasdaq is to the upside. Let's get more from Nick Collis. He's the co-founder of Data Trek Research. So, Nick, we're seeing some pressure for the Dow and the S&P 500. Is this kind of like a hangover from the disappointing jobs report?
It absolutely is. That jobs report was not anywhere near close to expectations. And I think the market's taking a couple of days to understand its effect, both on the reopening trade. Tech is still pretty strong today, so it's holding us up. But the names that are more cyclical, like in the Dow, definitely getting hit a little bit more. And I would expect to see that over the next couple of days as well.
I'm noticing when you look under the hood of the S&P 500, the 11 sectors, only two of them are higher: banks and technology. So what is that telling you about what investors are feeling about the reopening?
Yeah, it's a fascinating combination, isn't it? Because on the one hand, technology is your safe haven trade, worrying about perhaps schools shutting down or going to hybrid learning, or offices no longer perhaps pushing people to come back to work, and that whole reopening trade perhaps going slower into the fourth quarter. And then you have financials that are responding to all the continuing conversation about bond purchase tapering at the Fed and a steeper yield curve, and financials have been one area that have worked and should continue to work as well. So you're right, it's a fascinating combination of two sectors that should not be working together, but are today.
And I'm wondering, I know you guys have been predicting or expecting a slowdown in the second half of the year, especially since when you compare it to last year, because the recovery was ramping up. And so the idea that the economy is slowing is not something that's like blowing people's minds, right? But the fact that it seems like it's the Delta variant that's causing the slowdown. How troublesome is that for your stock market outlook? And then tell me, how do you tweak the portfolio if the economy is slowing, not just naturally because of the comparison, but because the Delta variant is really hitting?
Yeah, let's start with that last piece first, because it really is the most critical thing. How do you position a portfolio? And what we're telling clients is September is already a pretty choppy month to begin with historically. And we've had a huge run year to date, up 21% for the S&P, including dividends. And so we're expecting September to take a bit of a breather because we're going to be looking for a slower economy. We're getting that data right now. The upside to earnings isn't going to be perhaps as astounding as it was in Q1 and Q2. Still going to be fine. We still have a lot of confidence in corporate earnings, but we do think near term, you take some money off the table, you get a little more defensive, meaning you go back into technology, frankly, and you play the best cyclical sectors, which to our minds are financials and energy, and kind of leave consumer discretionary on the sidelines for now. So the most important thing out of this is we're going to see more bad news about the economy. You're right, Americans are concerned about the variants, both Delta and what might be coming down the road. So you want to get defensive here, not crazy defensive. You don't want to go to cash, but you don't want to be as extended as you were in August when tech was just ripping and everything else was working as well. Tech should work, energy, financials. Those are our three favorites.
And I'm wondering, why aren't we hearing more investment strategy around this fact that the jobless benefits, right? These extra, 10 million Americans are now not going to get these benefits. It's expired. All that money that was pumping through the economy is now gone. Is going to be gone. But we're not seeing that kind of reflected in the stock market.
Yeah, it's a very important point, and you're absolutely right. Underappreciated. We're actually writing about it for clients tonight because we do think it's an important topic. The bottom line is urban unemployment is still the key issue here. New York, LA, Chicago all have unemployment above 9% as we stand today. And so those are the areas going to be hard hit. A lot of the country already has pretty full employment, so it's less of a factor in many parts of the country. But in the areas, big urban areas, those three cities in particular, we are worried about that. And plus, on top of the fact that we're seeing some reluctance to now go to restaurants or go out and to group settings because of the Delta variant concern. So it's a bit of a double whammy. So good news, bad news is on a national level, not that big a deal. A very big deal for big urban areas.
But I'm sure those kind of big urban areas drive a lot of dollars, right? So I'm wondering, how does that make you feel about the retail sector?
Yeah, retail, not one of our favorite sectors for a whole host of reasons, not just demand, but also supply, inventory constraints, supply chain problems. We're seeing that, even in pre-releases today from people like PPG on the paint side, which you would think would be just rock solid, but it isn't. So we're a bit concerned on the retail side, absolutely. One of our proxies is we look at the number of times Americans search for the term COVID. And if you do that on Google Trends, you'll find that it went down 75% from the peaks in November all the way through June of this year, and then it picked right back up again. And now we're getting kind of close to the old highs. So a lot of Americans are worried about the virus and the variants, and rightly so to some degree. And so we do think it has a dampening effect on consumer confidence. We saw it in last month's retail sales. We're seeing it in back to school sales. There's a lot of places when you look, you see the effect of it.
All right, that's Nick Colas. He's the co-founder of Data Trek Research. I'm Conway G. Gittins, and this is Reuters.